we could see inflation go back to north of 5%, maybe even back to 10%.
Rising geopolitical tensions escalate in the Middle East. President Biden recently said that he will not support an Israeli strike on Iranian nuclear facilities.
Support an attack on Iran's nuclear sites by Israel?
The answer is no. We'll be discussing with the Israelis what they're going to do, but all 7 of us agree that they have a right to respond, but they should respond in proportion.
This comes as Iran launched a barrage of missiles into Israel earlier this week, and Israel contemplated how to retaliate. Meanwhile, in the North American markets, people are concerned about whether or not a longshoreman strike will reinvigorate inflation, especially on food and grocery items.
You're better off sitting down and let's get a contract and let's move on with this world. In today's world, I'll cripple you. I will cripple you, and you have no idea what that means. Nobody does.
Oil continues to trend upwards on the back of rising geopolitical tensions. Will that stimulate inflation? We'll find out. And what's next with commodities with our next guest, Willem Middelkoop. He is the founder and CEO of the Commodity Discovery Fund. Willem, welcome back to the show. Very good to see you.
Good to see you, David. Good to be back.
Let's start by talking about your outlook on inflation and the forces driving inflation. So I mentioned several news items in my introduction, starting with the geopolitical tensions in the Middle East. Let's talk about whether or not oil is going to rise from $70 a barrel to much higher prices because of what is going on.
Yeah, we're recording this October 3rd, and I just saw a news flash on Bloomberg that the US is discussing military actions against Iran with Israel, but not on the nuclear installations, but on the oil infrastructure, the energy infrastructure. And that's causing oil price to go up 4% now as we speak. But on general, of course, the oil price has been quite weak because we are in this economic downturn worldwide, one could say. So there's less demand and there's a bit more production. But of course, energy markets are quite unstable. And you see this in the whole commodity complex. There's so much tension in the market. As soon as markets and economy will pick up because of new QE, look what happened in China. The whisper of QE is enough to send markets up 10-20%. So I think inflation has come down for a while, but get ready for the next leg up.
The next leg up will be driven by what primarily? I think you wrote that it would partly be due to increased monetary stimulus. Can you comment on that?
Yeah, I think what happened in China in the recent days and weeks is a great example what will happen next for financial markets. So, of course, we had this strong rise of inflation. I called it superinflation, inflation of over 10%, right after the COVID crash when central bankers, of course, printed so much money that all prices jumped up. Central bankers have been tightening a bit over the last 2 years to get inflation down. They almost, succeeded to bring inflation down to the 2% target. But this has really harmed the economy. And now the economy will turn quite bad. You know, it's already happened, but you don't see it in the recession figures yet. But I expect a more serious crisis in the economy and maybe even in financial markets next year, within the next 12 months. And as soon as this crisis hits, you can expect central bankers to start a lot of stimulus again, a lot of QE. We've seen that in China, and that will kickstart another round of inflation, and it will move all assets the government can't print much higher. That's why
the U.S. Federal Reserve believes that we're headed towards a soft landing. So why would stimulus come from the Fed if that's the case?
Well, the Federal Reserve always expects a soft landing, but we had a very hard landing in 2008, so we know they are often wrong. But the Fed can make sure it's a soft landing because they can print as much money as they like. Of course, they know there's an inflation risk, but if central bankers have to choose between a deflationary crisis or even a deflationary collapse and some more inflation, they always choose inflation. And the Chinese just proved that thesis.
When we do get monetary stimulus again, are we talking about just lower interest rates, or are we talking about an expansion of the central bank balance sheet as well, bolstered by quantitative easing? Are we talking about what China did, which is to lower mortgage rates as well? Well, they have a command economy, so they can just do that. I know the Fed can't control mortgage rates, but perhaps they can also buy bond ETFs, which is what they did in 2020 during COVID.
I think the easing cycle has already started. We've seen lowering of interest rates, even in the US now, but also many other countries around the world. And don't forget, 2008 was the first real serious crisis within this monetary system after the 2000s. And every crisis happening now will need larger amounts of liquidity, larger amounts of money, lower interest rates. So we'll see the whole package. So it has already started by lowering rates. We'll see a return of QE. We'll see more financial repression. We saw the first signs coming out of Israel that they might even stop retail public to buy gold and silver. That was published by a Israeli newspaper. So everything is being discussed, and enjoy the financial freedom while it lasts.
Before we continue with the video, I'd like to tell you about the precious metals sector. Now, gold, as you know, hit record highs in 2024. So the question on everybody's minds is, what should we be following and tracking in relation to gold? Well, I'm here to tell you that Stellar Gold is a name to watch. Stellar is a leading gold developer with two cornerstone gold projects in Canada: the Tower Gold Project in the prolific Timmins mining camp and the Kalamak Gold Project in the Northwest Territories. The company has a massive global mineral resource estimate, one of the largest in Canada for a gold developer. Its young and ambitious management team, with a track record of success, is aggressively advancing its projects and is determined to unlock significant value. If you're looking for a team who is as enthusiastic about gold's future as you are, then check out stlrgold.com/David Lin in the link down below, or scan the QR code here, where David Lin viewers can sign up for their macro gold newsletter to get inside knowledge and updates for free. Do you think that if war breaks out into a larger regional war in the Middle East, and suppose the U.S. has to send troops and get involved, that may actually induce a recession? Would that cause markets to fall and then cause a ripple effect of supply chain disruptions, perhaps, and actually cause a massive slowdown in the economy?
Well, of course, the biggest risk and the largest wild card is a larger conflict, a larger international conflict. I think it's quite clear, at least that's my opinion, that Israel's trying to create a much larger war, because they have officially stated that now it's their chance to change the face of the Middle East, their words. We saw Israeli bombing a Russian airfield in Syria today. Now, Russia has called on its citizens to leave Israel. It's reported that over 1 million people living in Israel have dual passports. So it's getting more and more serious. Netanyahu, he would like to see the West involved in his war. It's a dangerous situation. So I think we'll see more volatility in the next few months or even quarters. But I don't have a crystal ball. I don't know how this war will end. But I do know that this war, like the war in Ukraine, is part of a broader conflict between the West and, let's say, the rest of the world, the West and the BRICS alliance, because the BRICS alliance is on the other side of both of these conflicts. And that makes me a bit nervous.
Okay, and then going back into the U.S. arena, the port strike has hit headlines, as you know. The ILA, International Longshoremen's Association, um, they are demanding higher salaries and protesting automation. More than 45,000 people have already walked off the job. Port closures on the east coast of the U.S., all the way from Maine down to Texas. What will that do to price inflation in North America?
This will be inflationary, of course, and we all know how this will end. This will take a few days, maximum a few weeks, and then somebody will give in and give them more money. I've seen the first pictures of people lining up at the Walmarts to stock up in all kind of stuff. They expect to go short in supply, but well, I think it's another example that there's so much instability out there. I just spent 2 weeks traveling the US. There were a few conferences there. Um, if you look at prices of just average food stuff, it's incredible. Inflation has been so strong, and many people are really feeling the pain now. So expect a lot more problems also socially.
Would this inflationary spike be temporary? Usually, when we have supply shocks, Willem, um, we've learned that in COVID, eventually they've sorted themselves out. Shocks to the supply chain, will those have a permanent effect on inflation, or would it be more temporary?
I think it's different. It's different this time. If you look at previous inflation cycles, we know that inflation often comes in waves. In the 1970s, we had three waves. The first one at the late 1960s, then two waves of inflation in the 1970s, which really changed a lot in the economy and for people. But if you look at we are I run a commodity fund, so we do a lot of studies on supply and demand of the different metals and the different resources. After 25 and especially after 2030, we'll see shortages in so many metals and commodities. So we also shouldn't forget that we broke out of a 40-year trend of declining interest rates and ever lower inflation. We broke out of that trend 2 years ago. So I think we're witnessing the start of a new trend with higher lows and higher highs. And we could see inflation go back to north of 5%, maybe even back to 10% in the next few years. And war is very inflationary. So should we have more conflicts, that would be even worse.
Okay, so much higher inflation in the next coming years. I want to flip over to my screen now, Willem. People calling for disinflation, if not outright deflation, in the coming recession point to two things. First of all, recessions are inherently disinflationary events, but also if you take a look at the 12-month CPI change, if I show you commodities, commodities less food and energy have been on a decline in terms of prices. In fact, the latest reading showed a decline of negative 1.9% on a year-over-year basis. First of all, will this trend continue likely? And second, if we have a deflationary trend in commodities, well, commodities are the base input for everything in our economy and society, Willem. Wouldn't that be deflationary for everything else?
It is deflationary, and the graph you show, it's the rear view mirror. So I think we're almost at the bottom here. And what China just showed and told the world, that the crisis is for real in the real economy, and to avoid a deflationary collapse in China, they needed to act. And the same will happen in the West within 12 months. So I'm not saying in 12 months we'll have much higher inflation, but I'll say I'm predicting that we'll see a trend change over the next 12 months. And in 2 to 3 years, we'll see much higher inflation. So expect more economic problems in the next 12 months in the West. Expect the central banks to pivot. They already started by lowering interest rates. And we haven't seen a real crisis yet within the financial system. There's one in China, but I think a financial crisis, a new one, could be happening real soon.
China experienced a housing collapse. I know things are different here, but could that happen here in the West?
Well, you had one in the West, in the US in 2008. Some parts never recovered of the economy. Look at what happened in Australia and Canada. They never had a real collapse of housing prices. They have a huge bubble. We have a huge bubble in the West as well, but there's housing shortages, so the bubble could continue. But if you look at the balance sheets of banks, just the commercial banks, they have all these unrealized losses on their bond portfolio. Even central banks now have huge losses. So the good years, I think, are over, and we do live in borrowed time, and that's why I think the next few years we'll see a rise of interest rates after this short cycle of declining interest rates, and then everything will turn again. And then the central banks will have real problems because everything they need to do to save the system will jack up inflation rates. And then they're really stuck.
China's stimulus, which commodities immediately should that benefit?
Well, we saw gold and silver jumping in the last few weeks. So I think the precious metals, they understand, and like Dr. Copper always understands the economy better than central bankers. Even copper was jumping. Look at other precious metals. Platinum, palladium went down for years, really bottoming out now and trying to break out to the upside. Uranium breaking out to the upside. And when listed equities in China jumped 25% within a week after these new measures by the Chinese central bank. If stocks jump 25% in 1 week, it tells you the value of money is coming down.
Well, what about base metals? Besides copper, you mentioned copper. Are we going to see a resurgence in other base metals? Will we see a boom in construction from China after the stimulus, do you think?
Well, once a bubble in a real estate market like China collapses, once the bubble bursts, you have so many negative effects on your economy that takes years. We've seen that in Spain, we've seen that in the US. So don't expect a very strong recovery for the full economy in China. In a way, they're in the same position now as Japan was in 91 or 92 or 93. And we know that resulted in lost decades, a few lost decades. China has a problem with its demographics. I'm not predicting China will collapse. I think China is very successful by leading the BRICS alliance, by using their currency to do all kinds of international trade with the BRICS members, like the US has always used their currency in international trade. And I think China understands why it's so important to build this very strong alliance and to become less dependent on the West. And the West, on the other hand, tries to decouple from China. And to come back to your question about resources and base metals, we'll see competitive tension between the West and the East, between the West and the BRICS alliance on the available commodities. I was in Botswana on a mine visit. There's a nickel copper project which could be restarted. And US ambassador, he visited that project a few weeks before I was there. And he told the management of that company, make sure this project isn't sold to China.
That will translate to, I guess, higher dollar, you think, or no? US dollar, if we have flows flowing into the US versus China and, two different differentiating blocks emerging.
Well, when I look at the graph of the US dollar, it tries to break down to the downside and break the 100 level for the dollar index. So I expect the dollar to go lower first. But once we get a real crisis, we always know that the large money, it flees to the dollar and gold. So dollar and gold could be rising both during times of crisis.
Let's take a look at what Donald Trump said at a rally in Wisconsin, turning out now to the dollar. He made some remarks about the dollar. As you know, Donald Trump prefers a stronger dollar. Take a listen to what he said, and we'll comment on this.
And we will rebuild our cities, including Washington, D.C., making them safe, clean, and beautiful again. And we will keep the U.S. dollar as the world's reserve currency. Right now, it's under threat. It's under siege. It's horrible what's going on. If we lose the world's reserve currency, that's like losing a war, isn't it? That would be like losing a war, maybe worse in many ways. Then we would be a third world nation.
U.S. is losing its world reserve currency status. Is that true?
I think Donald Trump understands money quite well. He understands debts. He understands the power dynamics in the international financial system. He once said that if we lose the world reserve currency status, we'll be a third world country. So he knows what's at risk. He understands what China is doing. And in a way, he confirms what my books are all about, that we're in the end game of the current financial system centered around the US dollar. That doesn't mean the US will collapse. That doesn't mean the dollar will go to zero. The British pound is still there. The British Empire isn't there anymore. British pound is still there. And this will, we can expect big changes coming to the international monetary system, to the geopolitical situation. The West is just 1.5 billion people. And they're now confronted by 140 countries not joining the Western sanctions against Russia. That doesn't make these 140 countries friends of Putin, but they are friends of China now. They support China more than they support the US. And these 140 countries, that's a total of 6 billion people. So in the numbers game, we're losing. And I don't know if you've traveled to China or the Far East in recent years, but look at the development there. I was just driving through the US the last few weeks. Look at the roads in the US and the bridges. It's horrible.
In your book, The Big Reset, you do talk about the end game of the dollar. Can we just revisit that one more time for the audience? By the way, we can check out The Big Reset. I'll put the link down below on Amazon. Great book. What does the end game for the US dollar look like?
Well, actually, you can download it for free at our website if you don't want to spend money. Because I think it's important that people understand this thesis. I'm in the process of rewriting the book for a second time. I released it first in 2013, then wrote a revised edition in 2016. And in the revised edition, I put down the thesis that China and Russia were working together to trying to change the current world order. And what's the current world order? That's a financial system built around the US dollar, in which the US, as the hegemon, is making the rules of the game and telling other countries, how to behave. And in the book, I propose that we are in the end game. We're in the last phase of this, very orderly world, this unipolar world. In which the US was calling the shots, and that we would enter a more multipolar world where there's a part of the world which doesn't accept the US as world's policeman anymore. And all these conflicts in the Ukraine and Israel actually are part of the same problem. And for me, the largest trend is all these countries, let's say the independent countries, uniting around China, so not uniting around Russia, but joining forces with China to confront the West, not to look for war the West, but telling the West, you're not calling the shots anymore. We're not using the dollar as the main reserve currency anymore. We will not use the dollar as the main trading currency anymore. This will take time. It will take another 3, 5, maybe 10 years before this has all changed. And what's very interesting is most of these countries east of Germany are now fleeing towards physical gold. Even Hungary and Poland are jumping are adding to their gold holdings. The Polish central bank just said today, confirmed today, that they will grow their gold reserves to 20%, 20% of their financial reserves. That's massive. That reminds me of the late 1970s. So there are many moving parts. It will get very, very interesting for commodity investors like ourselves. Over 50%, 60% of our investments are precious metals related. And we used the last 15 years. They were tough, many of these years. Valuations came down. But we used this 10, 15 years to really study the world and to look and invest in the last available huge commodity projects, precious metals projects, which will turn into new mines in the next decade.
When the dollar eventually, per your thesis, loses its reserves currency status, or people trade less in the dollar around the world outside of North America and Europe, perhaps, what does that mean for the average person living in North America and Europe? What does that mean for the average investor? Do our lives change significantly?
It will lose the sole reserve currency status. It might still be there and might still be a imported reserve currency status for the Western countries, but you will see more and more money flowing towards other currencies, including gold. And what does that mean for the average American? More inflation.
Well, this also might be inflationary. We'll close off here. I'm going to show you one more Trump rally clip. This is when he was talking about the issue we just discussed, which is protecting the world's reserve currency status. Take a listen here.
Instead of raising taxes on American manufacturers like this one, we will cut their taxes from 21%, which nobody thought possible, to 15%. So, but only if they make their product here in America and hire American workers for the job. Okay? I think it's great. Good idea, right? And if they don't make their product here, then they will pay a tariff.
He wants to implement tariffs, as you know. He also said in the past that if anybody abandons the dollar in trade, he will implement more tariffs as well, up to 100%, he said. Will this do it? Will this be the solution?
China's export to the US is only 2% of their total exports. So, of course, China won't like it, but they will take care of themselves. And of course, Trump can propose measures like this to keep America strong. And I think it's part of a deglobalization trend. It's part of a reshoring trend. And I think that's just normal. It's a normal reaction after this huge trend of globalization and outsourcing. And we're going from a just-in-time delivery system to a just-in-case. And what I mean with that, people will keep larger stocks of commodities and other projects, so they'll not get hammered when there are all kinds of obstacles in international trade, like harbors, which will stop functioning. So I'm not that surprised that he's saying this. It fits his America First thesis. But I don't think China will be shocked.
I appreciate your thoughts, Willem. Good update on the markets. Where can we learn more from you and study your work?
Yeah, follow me on Twitter. Look for my name. You can find me easily there. As said, The Big Reset, you can download it still for free at our website or buy it at Amazon. And of course, look at our website. We're open to international investors, also from the US. So 50K minimum. Thank you.
Good. We'll put the links down below. Thank you very much, Willem. We'll see you next time.
Thank you, David.
Thank you for watching. Don't forget to like and subscribe.